Warning, this is not financial advice. I'm not a financial advisor. It's a hard time to be in DeFi right now. I mean, a lot of these coins that we use in DeFi, if there was a big crash, they'd get hit even harder than Bitcoin. So what do you do? Well, I can just tell you what I'm doing personally. It's been a few weeks now. I've been farming, putting the yield into stable coins. Now, if you haven't done that, you could always look at pick off a couple of your bottom most weakest performers that maybe they're not paying any yield, or they just the price isn't holding true to the rest of the market. Second thing I want to remind you about, I talked about an interesting tool in DeFi, and there's never been a better time to use it. Phoenix makes it easy to get a little downside protection with 3x bear coins. They're on BSC and they're also on Matic, and this is what hedge funds do. They use a little component of something like this so that if there's a downside, they don't lose as much. What I've personally been doing, I didn't panic or anything. I was mining into stable coins for a while, or farming into stable coins. Now I'm taking that yield and putting it into a type of insurance policy. My position is different than most people. Right now, mining Ethereum is my main source of income. So what I realized is I'd really be screwed if there was some sort of 90% correction that I've heard about, So it's no big deal to take the yield for a while and just build it up into these types of things without going crazy or anything, and just give myself some downside protection. With the crypto prices being more volatile and these having 3x leverage combined, you really don't need but maybe 5% of your portfolio to be in these to get almost like a full downside protection. And there's almost always a fee associated with having these types of short positions. Because the first step of having a short position is you borrow some sort of coin or a stock, and people want to charge interest on that, which usually sucks. But in DeFi, that's why I said this is a really interesting tool in the tool belt of DeFi. So if there's some really small interest amount that's associated on a daily basis with holding these, if you're putting some of your yield over onto these, really no big deal. So in summation, by having some small component of these triple leverage short positions, I'm able to enjoy those juicy yields and the upside potential of those small coins while having protection.